President Trump announced a couple of weeks ago he is directing the federal government to buy $200 billion in mortgage bonds. Now, what does that even mean? Why is that even important? Here's the deal. You have the Federal Reserve. They basically say what interest rates are going to be in the country. And every now and then they either raise or lower them. And we've been waiting for years for them to lower them at certain amounts, thinking that mortgage rates would go down with it. The problem with that is that they are not tied to each other. Mortgage rates are actually tied to the bond market, which is totally different, but its cousin. Essentially, every time the Federal Reserve comes down with a rate, 9 times out of 10, so do mortgage rates. But the last 2 or 3 times that we've tried to do this, mortgage rates have not budged. In fact, they went up. But in this particular case, very interesting, because as soon as Trump announced this, hasn't even gone through with buying the mortgage bonds, rates went down. Now, what we want to see, or at least in the real estate industry, what we're looking for and anticipating for the last couple of years, is to get something where the 5s, 5.5, maybe even down to 5, something like that. That will be a significant driver in the real estate market to get things going again. And again, this was just Trump announcing that he was going to direct this. This actually hasn't even gone through. So we'll see once it actually goes through, or if it even goes through, how that will actually affect the mortgage rates. Because if it does go through, it will affect them, and probably pretty dramatically. It is something to watch because real estate will become much more affordable when rates drop.